Hi everyone. I think first let me tell you a bit about what we do and in which context we have actually looked at this problem. So Quad is a provider of adaptive execution. So in adaptive, I think there's a bit of what we were discussing earlier, which is we want to get this feedback loop with the observation and advice on trading, automation on trading, and as much as possible this being automated. We are mainly active in the equities and the FX space and in the execution side. So I'm mainly going to be talking about what we looked into to optimize the execution side of the trading. Yeah? So the first thing that we did look into is post-trade TCA and pre-trade TCA. From a post-trade TCA standpoint, I would say that on our side, the use of machine learning here has been, and what we looked into has been a bit isolated to crunching more data. I mean, I wouldn't say that we've been looking into using some very advanced machine learning tools there, except for an example I'm going to be presenting a bit later, which is data clustering. But where we think there was a very important interest here was really from a pre-trade side of things. What you're trying to do is you're really trying to leverage all the data that you've been gathering, and we will talk about this a bit later, into actionable decisions or advice, and in something that is going to be based on machine learning, so that we can have an optimized decision and optimized solution here. Yeah. So we've been focusing mostly on using, I would say, big data type of tools for the post-trade side of the TCA, and using more machine learning techniques for the pre-trade side of the TCA here. Yeah. And to put it back into context, I think we need to look at how this has evolved over the past few years. Yeah. So I think let's say 5 to 10 years ago, I think if we are looking at the way we were optimizing the execution, then we had a broker ranking pretty much that was updated not very regularly. I mean, sometimes that was just updated once a quarter, and it was actually very based on the relationship you were having with a given broker, or the whether you knew the guy in front of you. Sometimes, it was very sometimes approaches that were not very logical. And then we've seen the introduction of what we call on our software gating rules, which is pretty much a logic by which you are trying to put some of the rules that you've been using as a trader into some Boolean logic. First, these rules were being very infrequently updated, meaning that they were not really adapting to the market condition. They were rules, but they were like very static, and they were not really changing. And then gradually, brokers have been updating these rules a bit more frequently, so that they could get better return. I think one of the challenges with this approach is that you are trying to get to a better performance via an analytical approach, in the sense that you still have to structure your trading decisions into rules. Yeah, and being able to structure these decisions into rules introduce a lot of bias. You can have a feeling. You can observing and try to put these trading decisions into Boolean rules that are working in some market conditions, but probably not working on others. So there's a large bias that was introduced by this. So I think this is where we actually saw the benefit of using machine learning techniques here, because you are using, I would say, a more scientific and a non-analytical approach to solving this type of issues. And then you also don't introduce a bias in the decision that you are actually making, and with the ultimate goal, obviously, of bringing better performance and efficiency of the rules that you would be using.
Michael makes some really good points there, and I think what's really really critical here is that shift to a more scientific and rigorous approach, and with that you need data. You know, it's beyond sort of what was a few years ago, where it'd be a lot of feeling and a lot of sort of sentiment. Oh, that one's probably better than this one. Now, you know, if you have that data and you can line it up, actually that's where you're going to be able to add real valuable and get output and insight. And I think the other thing which is really worth talking about is, you know, especially as people move to more advanced machine learning techniques, they tend to have more parameters. You know, you go from a few simple sort of gating logic, as was explained a minute ago, to actually a whole suite of different parameters, different features that you might want to calculate off that data. That might be something simple like saying, okay, well, what is the routing logic when you know, spreads are wider or volatility is tighter? But it also might be, you know, certainly in other fields, and as we move towards more advanced machine learning techniques, you might want to include more advanced features. And certainly we've seen a lot of our clients, when they're implementing sort of execution analysis, will use features from right across the depth of the order book to actually build in that insight. So you're putting in these whole different sets of features and inputs with a wide set of parameters in your model. So you need scalability to be able to actually run that at scale, to tune and find the optimal parameters for the situation at hand. And the key thing then is, once you've got that input and you're able to produce those parameters, is actually embedding them in a real-time workflow, so you can actually use them to help that. And certainly that's where we've spent a lot of time and effort with our end clients into building in and incorporating that historical data, so you can ultimately turn that into a model which is actionable and ultimately usable in the real world.